Why are analyst phones ringing off the hook from worried investors? What ticking time bombs could derail the rally?
Let's bring in Kamish Nagarajan. I think I pronounced it right. Thank you, Kamish. Senior Vice President of Global Wealth at Morgan Stanley, Smith Varney, and Mark Zandi, Chief Economist at Moody's Analytics. Mark, I want to start with you first because you have been very optimistic, particularly since the tax deal was decided. Pen was put to paper. These knuckleheads inside the Beltway finally got their act together, so taxes won't be going up. That's conventional wisdom, is that the market's going to do very well in 2011. But we know conventional wisdom is very often wrong. Are you getting that fear from investors?
Well, I mean, I'm an economist. I think the economy is improving as we end 2010, and I think 2011 is going to be a good year. I mean, a good benchmark is GDP, the value of all the things that we produce. That's going to grow 3% in calendar year 2010 and about 4% in 2011. That's good, solid growth. That's a lot of jobs, and that's enough jobs to bring down unemployment. So in that context, I think investors should be optimistic about stock prices. I sense they are. As I just heard you say, the S&P is up 12% year to date, and I sense that the momentum going into 2011 is quite strong. So, yeah, I think the equity market is appropriately pricing in expectations for the economy next year. Yes.
All right, Kamish, Mark Zandi, pretty optimistic here. The market is trading at pre-Lehman levels. And I got to say, you know, everybody wants to feel like the markets are turning around, that this is sustainable. But I got to tell you again, the four most expensive words in the English language, what, this time it's different?
It's interesting. When we look at what investors are talking to us about, yes, they have concerns, and maybe they're cautiously optimistic. When we go back to our analysis, we believe a bull market started in 2009, and that continues. So while we have problems that we're talking about, we don't believe that they derail the economy going forward.
But, Kamish, conventional wisdom, as I said to Mark, is very often wrong. I mean, we think of real estate investments in 2007. You don't have to go any further back than that. Is there a fear on the part of some of your investors that maybe it's wrong this time?
Well, when we sit with clients, we look at what their job is, our job is going forward, and that's to advise them. And we look at their portfolios and what their concerns are. We try to block out some of the noise and look at where we're going. And certainly we're not investing for today or tomorrow, but in the long term.
I'll tell you, you know, it's a good point that Kamish makes, Mark Zandi, because the bond market's been pretty noisy. Mark, were you worried when you saw bond prices spiking higher by 1 percentage point in just about 4 to 5 weeks' time? Usually it takes 2 or 3 months for that rapid spike higher. Were you a little concerned about that? By the way, congrats on being part of the architect behind the tax cut deal. Your payroll tax cut got through.
Well, yeah, bond yields have risen, but I think it's because of expectations about stronger growth. If the increase in interest rates was due to concerns about inflation or concerns about larger budget deficits, then yes, that would be counterproductive. But my sense is, given that the run-up in yields has occurred at the same time that stock prices have risen and the dollar has remained strong, that this run-up in yields is entirely related to, or almost entirely related to, expectations for stronger economic growth. So in that context, no, I'm not worried about it.
All right, Kamish and Mark, stay right there if you can. We want to bring in our full Bulls and Bears panel. We have Mike Norman, Jason Schenker, Gary B. Smith, and Keith Fitzgerald. Gary B., I want to start with you because you run against conventional wisdom very often. What do you think about the fears that some people, you know, there are too many people like Mark and others saying that 2011 is going to be a great year. Toby Smith is saying that. Do you, in the back of your mind, have anybody whispering saying, gee, maybe conventional wisdom is wrong?
Always. But the fact of the matter is, what year, I think you could go back for every December since probably 1789, and forecasters would say the next year is really going to be good. It's going to be better than this year. So I think we kind of factor that into it. I am worried about, the big one out there is the employment number. It just doesn't seem to budge. And, regardless of what, people like Mark see, and, gosh, I respect his, economic background, until we see that start substantially getting back down where it was in the Bush era, I don't really see this economy moving much, and therefore I don't see the market moving much.
Keith, do you agree? Do you still see the economy moving at a glacial pace, and what does that mean for the market?
Well, I think if it is going to move, it's going to move because of overseas earnings. I don't agree, while I respect Zandy's opinion, I don't agree with that. And as far as bond yields go, people think of bond yields in terms of how much money they're going to get. Don't forget that interest rates are an expression of risk. So what's happening is that bond traders are saying, you know what, even if there is growth, we got to charge more for the money you're going to use. So I think risks are actually going up right now.
Mike Norman?
I totally agree with Zandy. I mean, I think bond yields have backed up, and it's a little bit. Historically, they're still very low, but I mean, it's been because most economists have been raising their economic forecasts. And the other thing I'll say this, the stock market tends to lead what's happening in the economy. It's been going up now for over a year, and the economy went from a contraction into a modest expansion. So there's still a lot of people out there without jobs. They're unemployed. So, yeah, their condition, their personal feeling, they're looking at the stock market, they're saying, well, hey, it's not very good for us, but it might get better, if these policies that we have in place now are maintained. I don't know. Next year is a new year from a political point of view. Congress changes. We'll have to see. But right now, things are looking better. You have to say that.
Jason, you worried about oil prices spiking higher? I mean, that could undo all the Fed's attempts to, spur GDP growth if oil prices spike by $15 or more higher.
Well, I think oil prices going up, similar to the stock market going up, is actually a barometer of U.S. and global economic health. It's not necessarily a bad thing. The unemployment rate's going to be high, but unemployment is a lagging indicator. So, really the economy is going to be stronger in 2011 than it was in 2008. We're going to exceed pre-recession levels. It seems quite logical then that the stock market should be going up, that commodity prices should be going up, and things look good. But there is that Pandora's box of sovereign debt and municipal debt that's lurking in the background that we've kind of gotten a peek into. That's what I'm worried about.
And Mark Zandy, this is going to kill Mike Norman, but we do have a lot more government spending that was attached. Hold on a second.
Zandy agrees with me.
Hold on a second. That was attached to the tax cut deal. It is going to lead to more government borrowing, at least in the short term. It is going to pressure those interest rates to go up even higher, those long-term interest rates. Could that be a pullback factor in the market?
Yeah, that would certainly be a reason for concern if Congress and the administration don't now turn their attention to addressing our long-term fiscal problems. So hopefully in the next Congress we'll see some action with respect to how we are going to address our long-term problems. But let me say this about the cost of this additional stimulus. First of all, it is temporary. The tax cuts are temporary. The spending increases are temporary. And more importantly, it's very important for the economy to gain traction, to really get going, because a precondition, a necessary condition for addressing our long-term fiscal problems is a solidly growing economy. We won't be able to do it unless we have strong economic growth. And I think this package is going to do in fact, just do that.
Unfortunately, a pre-existing condition of the government to spend more. But Gary B., who's got it right? Do the gold bugs have it right that they say basically inflation, that's why gold is going up? Or do the people who say the bond prices are going up, it's because of economic growth is right around the corner? Who's got it right?
Well, I'll tell you what I don't like. Let me just speak directly to the gold, Liz. I think gold is, I looked at the charts. Of course, that's what I'm most familiar with. It just feels and seems to me, Liz, like a bubble. Yep. I know the gold bugs would say, oh my gosh, it's going to go to the moon. We saw the same kind of rise back in the, back in the 80s. And, it went up like 500% in a couple years, same as it has now in just the past few years. And then it came back, it dropped precariously. That's what I think. So is there a link now between, do I think, there will be inflation? Yeah, there'll probably be a little bit of inflation just because we haven't had any in God knows how long. Yeah. But I don't like gold as a play against that.
I agree wholeheartedly with what he just said. And I'll say this. There's going to be a lot of gold investors when they're watching the stock market, if it continues to move higher and it's recovered a lot of its losses since 2008, they're going to start to bail out because gold doesn't pay you anything. It costs you to own it. It's a pure speculation. There are no dividends. There's no interest, on and on and on. Stocks beat inflation better than gold.
Kamesh Nagarajan, thank you very much. And Mark Zandy and our Bulls and Bears panel. More to come from them.